continue to loan $20 billion to these guys?
Let's talk about that with Peter Kaufman, President and Head of Restructuring and Distressed M&A at Gordian Group. Nice
Welcome
to have
back,
you here, Peter.
Nice to be here.
What is the solution? You just heard some opinions around the table. There's the prepackaged bankruptcy solution. There's the bail them out with government money solution. You've written extensively on this. What do you think the solution is for GM?
Well, our view at Gordian is a lot different than the government has shown so far. The Bush administration has been bailing out, promising the taxpayers that don't worry, you'll have a great long-term return here. But from our perspective, the nation in general, and certainly the automakers, AIG, for example, are a classic workout mode.
And what does that mean?
Well, it means that any savvy investor, any private sector investor who's going to come in to any of these situations is not going to invest money at the equity level or even at the junior creditor level unless all of the problems are fixed.
Well, what about a prepackaged bankruptcy? You offload the pension liabilities, all the legacy costs that this company has been saddled with for years and years, and they can start with a clean slate and start selling their cars once again. What's wrong with that?
Well, let's step back if we could, Bill. Bankruptcy is not a solution. Bankruptcy is a venue. You can implement a financial restructuring and a solution outside or inside Chapter 11. Prepackaged bankruptcy is one way to do it, but the government has yet to step over the hurdle of actually requiring what I'll call private sector fixes in order to put taxpayer money at risk here.
And what do you say, Peter, the auto industry's argument that we can't declare Chapter 11 and reorganize because no one will buy our cars? They're afraid that we won't be able to honor our commitments.
Well, a glib response is I don't see many people buying your cars today.
Oh, whoa.
But
go ahead, Phil. That's fighting words, I know.
But a more serious answer is that retailers, large retailers, Macy's, Barney's, Federated, have gone in and come out of Chapter 11, and I respectfully disagree that if the decision is made to recapitalize General Motors through a bankruptcy, that consumers won't buy their cars.
Airlines, people put their lives at risk flying on bankrupt airlines.
Guys, don't move. Stick around.
We got to take a quick break, and then Phil, you're first out of the break to respond to that.
We promise.
All right, we're following the markets and much more, and we're going to bring our whole group back in just a second.
Plus, looking ahead, the stock of Goldman Sachs down about 70% from a high at $240 in the last 52 weeks down to $68 today.
We have no plans whatsoever to consider anything other than continue to run the business. We don't think anything positive would come out of any sort of consideration of reorganizations. I've seen pundits write the stuff, but you can't sell cars to people under that circumstance. So I think it would be a devastating impact.
And that was GM CEO Rick Wagner. He was on Power Lunch with our Phil LeBeau just last week talking about the possibility of bankruptcy. Phil, I promised you would be first in our discussion with Peter Kaufman and the whole group. Do you buy the fact that if they go into bankruptcy, nobody's going to buy the cars?
I do, because I've seen the research from several different firms. They've all looked at this question, and the bottom line is any consumer confidence that's there behind the automakers evaporates. People are not going to put down $30,000 on a vehicle and expect to have some kind of a contract with an automaker for 3, 4, 5 years if they're now wondering if that automaker is going to be around. On top of that, if there is a bankruptcy at General Motors, a number of its dealers disappear. So now you have people who may have bought a car at a particular dealership, that dealership goes away. And
why
now
do they go away?
If they're continuing to make cars and buy parts from suppliers, why do those suppliers go away?
One of the few benefits that people will agree with in Detroit about going into bankruptcy is kicking out dealer contracts. They have more dealers than they need, so you could, in theory, kick out those dealer contracts.
The state law also gets in that way, right?
Well, franchise laws right now, you can't do it. You can't take away a dealership. And frankly, they need to do that. That's a long and arduous process.
Well, what about pension benefits and all the other legacy costs that they face right now? I mean,
the biggest legacy cost that they face right now, Bill, is with health care obligations.
Like
and they're in the process of transferring that over to the UAW starting in 2010.
Well, they don't have that much time. You just told, Rick Wagner told us he has to the end of this year, not 2 more years.
I understand what you're saying, but the argument that people are advancing with a prepackaged bankruptcy is everybody thinking it's going to be nice and neat and simple. Well, that's not the case. We
realize there is pain involved. But
it's not just pain.
The pain this time around fixes the problem, whereas you just prolong the pain by not going into bankruptcy.
What happened with Delphi?
But also, I got to tell you, you know
What
what?
happened with Delphi? They're still in bankruptcy.
How about the retailers that Peter mentioned? I know you don't have three-year contracts with those guys.
But airlines and automakers totally different. One is a manufacturer with huge contracts that extend across the entire economy. The airlines, that's a service industry.
I got to tell you, I'm not too excited about buying a car from a car maker that is in talks with the government for a major rescue either. So my confidence is destroyed there too.
Well, the confidence
but
on the
General
stock
Motors
market
is still number one, Dennis. General Motors sells more than anybody else right now.
Peter, you basically said earlier that bankruptcy was semantics, right? I mean,
Correct.
So what do you do?
Well, let's start with what you don't
Solve the
do.
problem.
No. Start with what we do.
Let's start with what you don't do. You don't put taxpayer money at risk under the mountainous debt, failed business plan, same management team of General Motors, because otherwise what you're going to have is exactly what you've had with AIG. The first plan was $85 billion. That wasn't enough.
Right.
And you've got them coming back now for $150 billion at AIG, and you're going to have an ongoing saga of, like Oliver Twist, please, sir, may I have more? So you've got to face up to the fact that GM is a failed enterprise, and you've got to figure out you have a national policy goal of wanting to see them in business in some way, shape, or form. If the answer is yes, the government can't simply be a check writer here. The government has to knock heads, have a creative, clever solution, an equitable sharing of the pain, the kind of thing that we do in workouts all the time, successfully.
All right.
And I think with a
very
company
much.
the size of GM, you're not going to see that anytime soon.
Thank you both.
all. The Dow's down 300 points. A lot of pressure coming from an enormous range of stocks in today's trading session. Keep in mind the bond market is not trading, so the market in terms of stocks may be coming under some excess pressure because of that.
All of this underscores the idea that you have to really go hunting for opportunities in this market right now. A couple of mavens will join us doing just that after this.